All right, what's up, tycoons? What's up, traders? Here to give you guys an update on ticker symbol BTTC. We're going to break it down on the daily chart as always. And as you can see, we've had some nice chart patterns here that have played out in the past. All right, we also have our major retracement levels here that we're currently testing right now. And there's been multiple times where there's been divergences on the RSI. This is your relative strength index. I'm going to explain all of these different things together, so that way you guys can get a nice update on the current price action, why these levels are so important, and some of the different signals that we use to help us really understand future price action, whether they're bullish or potentially bearish entries or exits. So make sure to smash the like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. So the first thing I want to cover is going to be known as bullish divergence. Okay, so if we take a look, we have some circles on our chart, and clearly we have a low and then a lower low, right? So the token obviously is heading lower in price, but if you look at your RSI, and remember, this is measuring the relative strength of a token at its given price. So we see that we establish a low here, and we actually make a higher low when the token makes a lower low. So when that happens and you're making higher lows on the RSI, but lower lows on the relative or on the token, that's a term known as bullish divergence. And as you can see, shortly afterwards, it went on a pretty nice rally and went up about 56%. Now, you can never tell how much a move is going to be based off of divergence. It could be 5%, it could be 50%, 100%, right? But it is an indicator that people look at, especially technical traders, to help them understand some of the future price action, right? Now, another thing that we use, okay, is going to be those Fibonacci levels. Now, there's three that specifically we like to look at: the 61.8, the 50%, as well as the 38.2. And the reason being is these are the three most common and well-respected retracement levels. So how do you use these if you're not familiar? Well, you take your swing high and you connect it to your swing low, all right? And you see we come down, we retrace up to the 38.2% retracement level, and then we continue that trend. So these are really useful for helping you establish trend continuation versus trend reversals, because nothing moves in a straight line up or in a straight line down. Rather, you get a move up, retracement, continuation of the trend, or a move down, retracement, continuation of the trend. And as you can see here, we got that move down, we retraced, and then continued that trend and made a low and a lower low. Same thing happened over here, okay? We ended up retracing, right? We come up near our 61.8% level this time, and then we continue that trend back downwards, right? And we continue putting in lows, lower lows, lower lows. But shortly afterwards, what we did was we actually started building some bullish divergence, okay? Now, there was a little bit of a head and shoulders pattern here. Like for instance, we take this, right, left shoulder, here's your head, here's your right shoulder, and then this was the neckline here that we were looking for a neckline break to really confirm that inverse that head and shoulders pattern. But let's go into the bullish divergence, okay? Because that's what helped fuel a lot of this rally here recently in the beginning of the year of 2023, along with crypto in general, as the whole market has really been strong. But these are some of the different technical indicators that you can use to really help you understand some of this price movement, right? So we have a low, we have a lower low, we have a lower low, but here we're making a low, a higher low, a higher low, higher low. So we're building relative strength while the price of the token is decreasing. We have bullish divergence, and sure enough, we've had a nice rally. But if we pay attention, okay, we are battling our three major retracement levels of resistance. We're battling that 61.8, the 50%, as well as the 38.2% level. Now, I talked about how you can use it to establish the trend continuation, right? With the move down, the retrace, and continuation of the trend. You can also use this to spot potential reversals. So if you move down, retrace, consolidate, and then break through those retracement levels, you could potentially spot an upside reversal, right? And so look at what happened all the other times, right? We didn't really consolidate around those levels too much. Over here, what did we do? We moved down, we retraced, rejected, and then moved down lower, right? And then here, we retraced up and then rejected down lower. We didn't consolidate as much. Look at the amount of time that we've really consolidated through this period here. So it's going to be really interesting to see, are we going to be able to get that reversal, okay, and make a new high above our previous highs here, somewhere up here in this range, or has this just been a healthy retracement and ultimately we're going to continue the trend? So below point, and there's a whole bunch of zeros here, okay, but we're just basically going to go over the last couple digits. So below 0.71, all right, 0.071, that's going to be where we're bearish below, because if we're below there, then most likely we have a stronger chance of continuing that downtrend. Now above that level, we're going to be a little bit hesitant, a little bit cautious and patient, okay, is going to be the right term. And above 0.077, that's when we're going to be bullish, right? If we can break through this level, flip it to support from resistance, then we have the possibility of really getting that breakout and ultimately the reversal to try to retest, if not create some new highs. Now, something we need to be cautious of is, just like we had bullish divergence, we have a high right here, and then we have a higher high right here. So clearly we're making higher highs going up in price, but on our RSI, we have a high and lower high. So we're actually creating lower highs while the token is creating higher highs. That's bearish divergence, and it could be an indicator of some bearish activity. Now, we did get a nice little drop already off of that bearish divergence, so maybe this bearish divergence has already played out. But we need to keep a big eye on this trend line here, right? If we reject this trend line and push back down lower, then ultimately that could result in us breaking through our retracement level here and potentially heading back down to retest some of our previous lows within this range. If not, if you're bullish on this, what you're going to look for, all right, is you're going to look for a breakout and then a reclaim of it as support from resistance, and ultimately move sideways or move back up. Okay, you don't want to see a false breakout, a look above and fail, where bulls are presented the opportunity to, on the breakout, to really push things higher. But instead of following through on the breakout, sellers end up taking back control and they fail on the look above and fail. So keep an eye on the RSI, and then keep an eye on your major 61.8% retracement level. If we can get a breakout on the RSI, and if we can get a breakout retest on our 61.8% level, just as we're looking for in the RSI, there is the potential that we could end up getting that reversal. Otherwise, a lot of this has been healthy consolidation, and we could be continuing that trend and coming back down to retest some of our previous lows. So that's it for today's video. Hopefully you enjoyed it and learned something new. If you did, smash that like button and subscribe to the channel.